everybody, this is Gabriel. I wish you a happy new year and a good start into a profitable trading year. So at the beginning of the year, it's not only the end of the month of December or the fourth quarter, but it's as well the end of the year, right? So I always like to use the beginning of the year as kind of looking more at a longer term view, kind of the big trends, and it's my big picture analysis, so to say, to see what we might actually experience during this year or the coming years. So let's have a look at some of the currency pairs. Well, starting as usual with the euro dollar. As you know, I'm very bullish for the dollar and bearish for the euro. Well, why is that? Well, because it's in a strong downtrend. It's in a downtrend channel, and the euro has basically peaked here 2 years ago into a cluster level, well, with the upper band of this channel, and with the 200 moving average, and basically the 120, 2000, a big number. And after this test, which was kind of a price exhaustion into strong resistance, well, the euro dollar has fallen off quite a bit, and the target then became the lower channel, and basically as well the par level. So I'm expecting here for this year or the coming years that we're moving lower, that there's strength coming into the dollar and weakness into the euro. Well, this is a slowly grinding a downtrend. We can see it here clearly on the weekly chart. It's not developing any momentum yet, but I'm expecting this to come in. So I'm already waiting for this for a good couple of months. But I think at some point of time we'll actually see momentum coming in, because the par level, the 1, is a very important magnet towards which prices are drawn to. But markets need a bit more time apparently. Let's have a look at another euro pair, the euro pound. What's always interesting because we've got the Brexit in Europe, right? And that's what gives us quite volatile moves. And the last couple of months we've seen strength coming into the British pound. So that shows that the Brexit is not that bad to the British economy. So money is moving out of the euro and into the British pounds. Well, we've got a quadruple top, so price has not been able to go higher. There's a clear rejection here at the fourth trial, and now price is falling off and has made a new low. And I'm expecting this to continue as there's such a strong ceiling of resistance. I'm expecting prices like during the next 12 months to test the price support here at the 07,000 level. Let's have a look at the euro Swiss. As you might remember, the Swiss was pegged at the 120 level here against the euro. And this peg was released here 4 years ago, and price fell off. The Swiss has increased in value within a couple of seconds or minutes, right? But then price came back by a pip and tested this level, so that was resistant. There was a successful test, and since then price is falling off. And basically, well, the euro Swiss is in a strong downtrend, so the Swiss is very bullish against the euro, and I've got a clear bearish bias here on the euro Swiss. I've traded that in the past, like during this phase, during the last couple of years, heavily before the peg came into action. I think we'll get times that are with more momentum. We're still kind of in this pullback phase, and we're in an early downtrend, and more momentum should follow on the downside as well. Here we've got the very big number, the par level, and prices are drawn towards this level and slightly below. Well, we've got the wick low, which is a very good stop run level. So whenever price comes close and spikes the par level, we should see we should see an attack of this stop run level, and we might actually see a strong price move lower. So if this happens, there might be some confusion, some economic chaos in the eurozone, which makes money leave the euro and go into Switzerland, which is not part of the euro. Right? which is kind of a safe haven for the Europeans. So the chart basically tells me that there's some economic chaos coming up within the next couple of months or years here in the Eurozone. Let's have a look at two weak currencies compared, like the euro against the very weak Australian dollar. And here on the monthly, we can see, well, the euro is slightly stronger than the Australian dollar, but with the size of the wicks compared to the bodies, well, it's basically sideways, slightly going up. So that tells me that both the euro and the AUD are very weak currencies. And whenever you have a weak currencies and you combine it with a strong currency, well, then you get nicely trending charts. Now let's have a look at some of the majors, like those currencies that are coupled with the US dollar. So here the AUD, so the AUD is a weak currency, right? And the US dollar is strong, it's very strong. We had here on the monthly chart, we had a busted pattern that has triggered like a couple of years ago in 2017. And it's running its course. So it says it's kind of trying to run its last stop and level below the consolidation low. Well, these are only tests of this level. It has not made its stop run yet. So price shied away basically, and we're coming back to test the 21. So it's clearly bearish here, the AUD US. So the Australian dollar is very weak. And once it's able to break free, like to break this consolidation low, the busted pattern, then the next level becomes here the old 6,000 level, which is another stop run level, like price support, and the target of this, well, it's a measured move. So I'm looking for, well, price can go quite a distance and devalue the Australian dollar even more against the US dollar. Now here's the pound US, so the British pound, and here as well we had a busted pattern, and that's something that I've called out during a live trading workshop here in 2014, and it has run its course already. It has broken the consolidation low, right? It has achieved its measured move target already. Then there was a big pullback to the moving averages, and it has tested that quite extensively. But that was a deep test of 21, and it's still continuing in its overall downtrend. So it has not been able to make a new low towards its targets here at the par level as well. And we've got another test of the 21 and another test of the last lower high. So I'm bearish for the pound US, and here on the weekly we can see, and I've pointed that out before, like within this consolidation, that we are likely to see a spike, like a price up move into spiking the 200. And that's what we got. We got this spike of 200. It went beyond. We've seen a test, a stop run behind the last high here. And now prices are retracing quite strongly. We've got kind of a rejection here, 2-bar rejection. And I'm expecting the continuation of this overall downtrend in the pound US. Now another major here, the US, the Swiss. So both are strong, right? The Swissy and the US dollar, and we can see it here on the monthly chart. We're basically going sideways. But if we zoom out, we can see that this is clearly a downtrending chart, the long term, and price has formed here a busted pattern consolidation, and it has already triggered a couple of times. Like it has triggered here, and it has triggered here and here, and I was kind of convinced, like after this, as it has gone, that it has broken these 3 weeks, that it would start a momentum on the downside, like in line with the overall downtrend, but it didn't do it. And it takes a long time here to trigger, right? So we're still above the red flat line. So by now this busted pattern, as it has taken so long, this consolidation, this got invalidated because this activity on the other side beyond the flat is longer than the consolidation itself. So it has gotten invalidated, and it can basically go in both ways, because we've got stop run levels on the upper side and we've got stop run levels on the lower side. Obviously, as we're in an overall downtrend, I'm expecting to see this to develop on the downside, but I'm not counting this anymore as a busted pattern. So it's interesting to see if we see some chaos in the Eurozone, economic chaos. It's going to be interesting to see the money flow into the Swiss franc and into the US dollar. Let's have a look at some of the cross pairs here. The odd yen. The yen is relatively strong. We've got a double bottom, a clear double bottom, and this double bottom, this price level has been tested several times, and after this, this one has broken the level. Well, price shied away. I'm expecting this to continue in line with the overall downtrend. So I'm actually seeing the yen to continue its strength, especially against the Australian dollar that is weak. And the price target becomes a 60-ish level where we have a price resistance here. That's a long way to go. We might see a good trend continuation on the downside. Let's have a look at the another odd pair, Australian dollar against the Swiss. Well, the Swiss is very strong, right, against the weak Australian, and we can see how it's trending on the downside. And I'm expecting this. Well, so that's a nicely rounded shaped of consolidation pattern here on the monthly that has gone on for many years. So whenever we see a volatility contraction like this, we can expect some more volatility to expand, similar and in line with what we've seen before. So we might see a three-leg down move with good momentum coming up here. So strength into the Swiss franc is likely. Here another Swiss pair against the Canadian dollar. So that's kind of a special situation. It's in a flat and slim sideways consolidation here on a monthly level, like a 4-year sideways consolidation. We've got a cluster of stop run levels on the downside, and once it starts a run, like once it starts to wake up out of its sleep, you can see how volatility has contracted more and more, how the bar's gotten smaller and smaller. Once it starts to wake up, we might see nice momentum moves like we've seen before, right? So what can happen as well is that we get a breakout failure. It's kind of an S1 pattern, a breakout that fails before it starts to run lower. So we've got these two scenarios, basically a special situation here. Let's have a look at two correlated pairs, the Australian dollar against the Kiwi. So it's clearly in a downtrend as well here. It's kind of it has been consolidating for a couple of years. The Kiwi is much stronger than the Australian dollar. And here as well, we've got some stop run levels aligned on the lower side. We might actually see some momentum here coming up as well with Kiwi strength against the Australian dollar. The last one I want to look at is the Euro Singapore dollar. So the Sing dollar is very strong, well, especially against a weak euro, and we can see here that it's approaching a very important level. So price has tested this level over the several couple of years. We've got lower highs coming in, getting closer and closer to this level. So let's zoom out. We can see we're in a clear downtrend for the last 10 years, right? And we're finding here a resistance at this level, and this level will be broken sooner or later. And if it does, well, then we see some nice momentum move coming in. With well, the measured move is this one here. We can see that like during 1 year, we've seen a couple of big red bars. So this is something I'm expecting to see here for the Euro Singapore dollar as well. Here we might see some chaos going on in euro, and Singapore is seen as a safe haven as well, similar to the Swiss franc. So interesting times. Things are brewing, I think, on the economic front, and we'll see how that plays out in this coming year. Thank you.